This is the MTPredictor weekly market update for September 29th. So we are coming up to the end of a quarter here. Monday will be the last trading day of the quarter, so pay attention because that can typically be a very difficult trading day, if you're trading intraday, that is. And then, of course, we start the last quarter of the year. We've got a lot of things happening now with this potential of a delay of Obamacare. The debate on the debt ceiling, all this coming in the last quarter of the year here, and so it's also been a time of year that the market has had its corrections and crashes, so we definitely want to pay attention. So let's look here at the S&P. I'm going to do some things a little bit different here, but we know again, we had our, using the tools in the software, our 5-wave pattern up here. We got our initial sell signal, and we did begin to correct. We did get our, again, recommended the stops be moved to break even, and so that was the case there. And you see we've made a new high here. Let me just re-clear this off. This little pattern subsequently here just unfolded as an ABC pattern. It's with the trend, so it's not of much consequence as far as that goes. But what we do have is, if I take a decision point off of the last swing high here, we're in another resistance area. Right, we closed the week here with the red sellers candle. That tells us the sellers were overcoming the buyers last week. The other thing that we have, now I drew some trend lines here prior, so you can just see obviously the trend is still up. We got our answer. The Fed is not going to be tapering. It's continuing the 85 billion a month purchases, and indefinitely so. Again, as the interest rates, if they remain low, stocks will continue to grow. Doesn't mean that we can't have corrections and crashes in the meantime. We've seen corrections during this whole move up since the March lows of 2009. It doesn't just go in a straight line, and so we pay attention obviously to the trend, which is up, and the saying "Don't fight the Fed," and "Don't fight the trend, don't fight the Fed." Those are things that you hear commonly, and this is certainly the case here. But it doesn't mean that we can't have low risk, high reward trades in these areas to the short side. As you see, we did here, we did here. This one didn't make it all the way to the target here, nor did this one. But the key is, if you have the small losses and big wins, then if you're only hitting 50%, you're going to be actually doing very well. Anyway, what I wanted to kind of go back here and look at, you see there's the March lows of 2009. You see the software caught the very, very bottom of all that. But I'm going to continue to kind of scrunch this in here and just show you a couple of things, again, using the tools and the software here. So here's this last low. This goes back to late October, November of 97. I'm just going to take a decision point. These decision points look for, again, for turning points in the market tops, market bottoms, and so forth. And you can see this kind of little triple bottom came right into this decision point again, which you would have had a few years in advance on the chart, just waiting there ahead of time. All right, and that's all right. Now, if we take this kind of succession of lows here, and we just take a decision point off of these levels, you can see where the next low came in. Now here's the prior all-time highs there. Let's take a decision point off of this level, if I can get that on here. Let me open this up here. I've got to get that on just right to get the level projected on the chart here. Let's see if I can get this on here. There it is. Okay. And look where we are, smack dab at the bottom anyway. Whoops. smack dab at the bottom of this major decision point, this weekly decision point. This is actually a monthly decision point. In fact, if I go to the monthly chart here, you'll see it a little clearer than some of the analysis I've got here. I'm just going to take this off. Let's just redo it. So here's this last, take this one off. Here's this last swing high back on the prior all-time high there. And this is our, major monthly decision point. So if I'm trading off the weekly chart, I can use the monthly chart to map out these major levels of support and resistance. So let's just go back down to the weekly chart here. And again, you see that level of resistance. This is the area we're in. This is a major level of resistance. We've seen major turning points in the market at these levels. Okay, so again, this is why we want to pay attention. Now, it's a big area here. This area goes all the way up to around 1830 in the current December contract of the S&P, and so we're trading around 1686.50, I guess was the close there on Friday. So it's a lot of room to the upside. But we could anticipate, based on just the current analysis here, that we're in some minor decision point resistance from the weekly chart off the last swing high here. We're still in that wave 5, minimum wave 5 area here. Here's your typical wave 5 at the top of the around that 1800 level. And so we certainly could correct from here. Let me spread this out again now so we can focus on the. All right. Let's take a decision point off of this swing low, because this is the first level of minor support. Let's just look at a setup here. If we breach the low of last week, this is going to be too small a target. It's only 1.4 times your initial risk, right? But if they take this level out, let's take a decision point off of the wave 4. Let me, if I can get that on there here. I've got so much stuff on here. All right, now let's just look at this in terms of the wave 4 DP. There would give you 3 times your initial risk. So again, this would be if you do attempt a short here. Again, everything we do is going to be low risk, high reward. Looking at a breach of the low there, 1680. Is that correct? Let me see. Let's see, the high was 1707, the low 1680. Yeah, it looks like 1680 was the low there. So 1679.75 there would be the entry to the short side. If you achieve the 100% initial risk line, especially if you hit this DP, you got to expect the market may rally here, so you can move stops to break even. That's if and only if we see 1679.75 there, if you're going to take an attempt there. So the correction may be shallow, may not make it all the way back here. We may get another move higher. Again, we've got 1800 is a nice big attractive level there. Typical wave 5 is up there, but it's going to be probably a volatile period here as we head into the last quarter, and a lot of things still yet to unfold. And we'll get through October, and then maybe we can get that last rally into the end of the year, into Christmas, that we've seen before. So this is interesting. We'll see what happens here. The other thing that we see is that we've got a higher high in price here, and we've got a lower high in the oscillator, so there's divergence here as well. And so in that decision point resistance, in the larger degree decision point resistance from the monthly chart, this is an area where we could have a potential major turning point. I've shown charts before of that 25-year broadening pattern. That 1800 is around the top of that range there as well in the S&P, and maybe we'll take a look at that next week as we have a little more time. All right, let's look around at some of the other markets here. Okay, I'm going to start with the daily chart here of gold, because we had our our sell signal here. It was a standard trade setup as our STF. The trend indicator there was red, telling us that the larger degree trend was down. And again, this is a situation where we anticipated, this was that Fed announcement that we'd have some volatility in here. Continue to expect that. At this point, stops can be moved to break even if you hadn't already. And we'll see how this will finish out. You see the target down here. It's a very large one of almost 13 times your initial risk, around 11, almost 1148. And then I'm going to go up to the just kind of a little bigger picture to the monthly chart here, and let's just check the pattern from in terms of the monthly chart. And you see we're in a wave 4 here. Now, doesn't mean that we can't roll over and see that that target, and we'll actually still be in the wave 4 support area. All right, but we'll have to keep an eye on this kind of bigger picture. And if we look at silver, because we also have short. Well, this is the monthly chart here, just an ABC corrective move there on the monthly chart. Let's look at the weekly chart, where we had our wave 4 with the red sellers candle telling us the first time that sellers were overcoming the buyers in the wave 4 resistance level. Again, we project down wave 5 using the tools and the software here, starting at the top of wave 1. Okay, and this gives us our minimum wave 5 target coming in there right around. Let's move this up a little bit. Get that on there, 1760, right around that level. And so we can check the risk reward, which we've done before to the target there. Just about twice your initial risk there, around 1750, 1760 level. And again, we'll see if this particular one on the weekly chart eventually reaches the 100% initial risk line around 2020. If it does, you move stops to break even there, and then I believe on the daily chart here, this is where we had the sell in gold on this pattern here. We'll see how this they are able to work their way down, getting some more selling in there. If not, again, we're going to have to watch based on the weekly chart. And I don't think I have all the pattern drawn here, but I'm just going to do this quickly. If I can get that on there. Right about there. All right, that was the break of this bottom. It was actually a descending triangle, and they broke that level there. If they, it's very typical, once they break, they retest that level and roll over, and that's why we're looking at this as a potential good short on the wave 4 heading into the wave 5. Retest those lows, and then we'll see where we go. Maybe the bottom is in at that point. We're in a larger degree wave 4, and so maybe that's where the wave 4 begins to we begin to come out of the wave 4 heading into the monthly wave 5. All right, so we'll keep an eye on that. And then last, I'm going to wrap it up with this. I'm going to actually go back to the S&P, and we're going to go down to the, we looked at these decision points on a large time frame, but we use these intraday as well. And if you're trading without these levels, let me clear everything off here, then you're really doing yourself a disservice, if you will. Here's the 15-minute chart, and this is the chart that we use intraday before the market opens to map out major levels of support and resistance to give us areas where the market may turn. And I'm just going to show you these decision points. Let's see how far I want to go back here. Expand this a little bit. So there was a swing low back here. Again, if I take my, let me just turn these off. If I take my decision point tool, on this particular day, it projected an area of major support. Right, you can see the pattern here. Obviously, we had a 5-wave pattern down on the 15-minute chart. Okay, in conjunction with a major decision point support. So what we were looking for this particular day on the 3 and 5-minute charts were opportunities to be a buyer, and we actually ended up buying the low of the day. Right, well, where did that rally go to? Let's take a decision point off of this prior swing high. Boom, right into the next major resistance. So this in effect is what determines our trend. Right, we use the larger degree time frame. In this case, if I'm going to trade, let's say, the 3-minute or 5-minute time frame, we'll look at the 15-minute chart to map out this major support and resistance each day before the market opens. So we know if the market does rally into this level, the trend which was up may now turn and become a trend in the downward direction. Right? Where did this? Let me clear this off now. Where did this selling end? If I take my decision point tool again, right in our major decision point support area. Where did this rally end? Look at the last swing high, right in this level. Okay, so these are very, very, very helpful, especially if you're trading intraday. You look at this level here. Didn't quite reach that level. That level is still out there. This one is the last one, which may come into play tomorrow. We'll be watching that level. Let's kind of expand this out a little bit. All right, so these levels, if you're not using them in your trading, again, if you're trading off the daily chart, you'd go to the weekly chart and map out these levels like we've seen as we went from the monthly chart, or the weekly chart to the monthly chart, to map out that major S&P resistance that we have on from the monthly chart that we're in now. But we use these intraday so that we can go down to the smaller time frames, and go down to the 3-minute chart, let's say, and we see these areas on our chart. So these are the areas we can be buyers. This is an area we can be a seller. And this was a great trade in here. In fact, it was an even better trade on the Dow. But this was just basically a gap fill trade for 6.5 times your initial risk. Again, small risk, so you can see we can pick market tops and bottoms using this software without taking any more risk than if we're trading, the meat in between the trend. Okay, risk is controlled, so let's say on a $375 risk, you'd be taking out 6.5 times that, or about $1,600, almost $1,700. I'm sorry, about $2,400 in profit to the target there at 1686. Again, this is an area we'd look to be a buyer. Now here the software, we were in a major support area, and the software, nice high volume spike telling us professionals were stepping in here as well, and the software gave us a buy signal. And so all we had to do here was just right click, choose the analysis, and the software set the trade up. So again, a low risk, reward twice the size of the initial risk, and that's what we're looking for. It doesn't matter if you're trading on the weekly chart or monthly chart or 5-minute chart or 1-minute chart, use these levels are just invaluable to your trading. So if you want more information, you can come to MTPredictor.us, and I'll show you where you can get a little more information. This is MTPredictor.us, And right on the right hand side here, you can just enter your name and email and click the button there, and it'll send you the free PDF, the introduction to MTPredictor, and we'll show you how we use the software, no matter what type of market or time frame, whether you use range bars or tick charts, it doesn't really matter. The key is support is always going to be support, and resistance is always going to be resistance. So get that information there, and then some excellent videos under the webinar tab here. There's some video training if you want to see some videos of the software and the different patterns that we look for, that 5-wave pattern, the wave C pattern, those high volume spikes that give us a heads up where professional buyers are stepping in or sellers are stepping in, and then how we use the tools in the software to uncover our own trade setups based on our own analysis. The Holy Grail trade there, for one, is basically trading in wave 2 heading into a strong wave 3. That's the biggest wave, so it's a very low risk, high reward trade. And then just the basic trade setups that the software provides to get you started. So anyway, I'll leave it there. Wish you a great rest of your weekend. Remember, Monday is a last trading day of the quarter, and then Tuesday will be the first trading day of the new quarter, which tends to be a good trading day. So have a good rest of your trading week, and we'll see you back next Sunday.